Good morning, everyone. Good morning. We are coming to you live from Jamaica's headquarters. Well, the headquarters of JMMB Group in Jamaica. Welcome, welcome. Today is the 15th of February. It's the day after Valentine's Day, and as the financial services group founded on the basis of love, it was a great day, and we're happy to have you here with us, where we're going to be sharing with you another update on our financials. Year to date, at the end of Q3, we ended our third quarter at the end of December. Our results were posted to the public earlier this morning, I understand, to the market by the relevant stock exchanges, and we're here to share with you the good news and what has happened throughout the period year to date at the end of Q3. My name is Carrie Ann Stimson, and I'm the Group Chief Marketing Officer at JMMB. And with me here in studio at head office is our Chief Financial Officer, as always, Mr. Patrick Ellis, who will be sharing with us details on the numbers as usual. And joining us remotely, because he is traveling overseas, is our Group CEO, Mr. Keith Duncan. And of course, I'm going to hand over to Mr. Duncan to do the usual context setting first, followed by Patrick, who will dig into the numbers, and then we will wrap with Keith, who will share with us about the way forward. And as always, most times we do have good news to share today, so we're excited about that at the appropriate time. But in the meantime, I will hand over to Sir Keith to share with us the context as we kick off this morning's presentation. Keith, good morning. Welcome.
Good morning, Carrie Ann. Morning, Mr. Ellis, our group CFO, team members. Morning to the investor community, to the analyst community, to the media community. Good morning, all. So, just to give an overall context, because JMMB is a diversified financial group across 3 countries: Jamaica, DR, Trinidad, and now Barbados. So let's say 4. As we're now up and running in Barbados, and as of course we know, we do have strategic investment, and a significant one being our 23% stake in Sagicor Finance, which continues to produce good results for us. And I would jump in terms of the operating environment, the macroeconomic environment, which we continue to face in globally and locally in each of the territories. We know that for Jamaica, which has been a major contributor to the group, interest rates continue to be at 7%. The inflationary outlook is for inflation to be above the target range of 4 to 6% for the 2024 calendar year, which means that we do expect that interest rates will probably hold at around the BOJ signal rate of 7% for the year, and therefore we expect with inflation being above the range, we do expect that the central bank will continue to keep monetary policy tight, which means tighter liquidity conditions for the market, which means that the cost of funds of deposits and other liabilities will remain high, but has to be managed very, very deliberately over the period. We note that, for example, the Bank of Jamaica CDs, 30-day CDs in the Bank of Jamaica's efforts to maintain tight liquidity is trading somewhere between 9 and 10%. And therefore that does impact our cost of funds in managing our cost of funds, and that has significant implications for the investment business line in Jamaica, and also banking as spreads are compressed. In the Dominican Republic, we have our country manager online, but I will just say, Mr. Juan Melo, but I will say in the DR, there was some relaxing of monetary policy rates down to 7%. However, the central bank in the DOMREP has held rates at 7%, and I believe are waiting on to see the next moves from the U.S. Federal Reserve. Trinidad and Tobago rates continue to be at around the 3.5% range. 3.5%, the central bank has moved rates. Now, in relationship to globally, what's impacting interest rates is the U.S. Federal Reserve and the rates that they're set, their signal rate. And what we do believe is that we would expect to see interest rates come off in the U.S. with the Federal Reserve looking to reduce interest rates going into the latter half of 2024. There was some optimism about it occurring earlier. That is not, the market has kind of now looked at looking at rates probably being reduced, maybe 2 to 3 reductions in the second half of 2024. That sets the context for domestic interest rates across all markets, and therefore the world is waiting the movement from the Fed, and all the signals and all the data that comes out drives market conditions. And therefore, what we expect to see is a little bit more of the same, higher interest rates for somewhat longer. And therefore, we expect that what we expect to see is the continued compression on our net interest income revenue line, and which especially in the DOMREP and Jamaica, we do expect that the opportunity to trade securities will not be as they have been in the past, and therefore our gain on securities traded business line will not be as vibrant as they have been in the past, and therefore it's a tough operating environment that we're operating in at this point in time, and that is reflected in the numbers, our numbers, as I said, impacting some significant business lines. We continue to be adequately capitalized, and we are managing our capital in a most efficient manner, ensuring that the business lines that we grow are done so efficiently, and using our risk-adjusted return on capital model, we are ensuring that we do get the return on our capital. So despite all of that, we have seen a profitable Q3. A profitable Q3 from an operating profit line that would be from the business operations. DR and Trinidad would have had a decent quarter. Jamaica would have been impacted significantly by the same underlying market conditions, but we would have seen significant gains from our Sagicor acquisition, and an acquisition which was made by the Sagicor Group. And I believe Patrick will jump right into that. In terms of how we go forward, we do have to continue to drive for efficiency and drive for delivering win-win solutions to our clients. JMMB launched its Financial Life Goal Center a number of years ago, and we continue to integrate and make it more efficient and make delivery of services more efficient to our client. And we'll be moving to that over the next couple of months, where we are fine-tuning that effort in relationship to having one point of contact for our clients and deepening our reach within our client base, because JMMB has a very large client base across the region, especially in Jamaica, and we want to be able to touch as many clients as possible with solutions, win-win solutions for our clients, and also to drive that in a very capital efficient way, the JMMB Group. The funding mix, due to the margin compression, we have to continue to focus on that area and look to deliberately manage our cost of funds down as best as we can, subject to market conditions and liquidity. As interest rates have moved upwards, we have to also look to see how we can pick up additional assets at higher yields, so that we can improve the yield on our assets while reducing the cost of funds, and therefore looking to increase net interest income. Bearing all that in mind, and the market conditions that which we face, we have to look to continue to drive efficient operations. And that may mean we have to look at managing our costs in a very deliberate way, in terms of timing of investments, capital expenditures, in terms of managing our staff costs, in terms of managing our other costs, to ensure that we can keep our efficiency ratios moving in the right direction, knowing that they have been impacted by the fallout in our net interest income lines and our gain on securities traded business lines and the spread compression. So therefore, we have to continue and be very deliberate around how we manage our cost structure going forward. And on that note, I'll hand back over to Kerry. Thank you, Kerry.
Thank you, Keith. Much appreciated. And so without further ado, we'll hand over to Patrick, who will give us the deep dive into the numbers as they were disclosed.
Thanks. Thank you, Kerry. And morning again, everyone, to all our stakeholders. I think Keith did an excellent job in setting the context for the JMMB numbers, and as I dive into the numbers in a little more detail, you would have highlighted the fact of the high interest rate environment that would have impacted the group in terms of our investment business lines. You mentioned the high interest rates in terms of even where 30-day CDs in Jamaica was between 9 and 10%. What we would have seen is a different stance within DR as well, where we would have seen some interest rates cuts. And that macro environment is also reflected in the numbers. The group posted overall net earnings of 17 billion year-to-date numbers. However, just to set the context, included in those numbers, we had a one-off gain of about 14.6 billion, which we reflected from the closure where our associated entities, Sagicor Financial Company, closed the acquisition of Ivari in Canada, which resulted in a one-off gain arising from that transaction of about 434 million US, of which 23% of that would accrue to the group, and we have reflected it in our third quarter. Normally, we would not reflect the numbers from the third quarter from SFC, as they would have adopted a 90-day provision and they published their audited at the end of March. We're required to publish in February, the 14th of February. However, they would have made public to the Toronto Exchange all the details surrounding the transaction, and as a result of the transaction being made public, then we had to reflect that in our numbers at the end of December. Numbers are still preliminary, but we are very confident they were audited and made public, so we have adopted it accordingly. But excluding the one-off, we would have attributed 2.3 billion in terms of earnings to the group. You would have seen our operating profit down approximately 1.1 billion, and that reflection of it being down as a result of our net interest income being impacted from the high interest rate and cost of funds, and therefore we would have had some spread compression. That reduction was mitigated somewhat by our gains on securities trading. You would not have had a lot of the investment business line in Jamaica would have been basically flat or slight decrease year over year. However, with the interest rate cuts in the Dominican Republic, we were able to take advantage of various opportunities in DR, and hence we posted 5 billion in terms of gain and securities gain, up 1.5 billion year over year, mainly attributing to the DR and the interest rate cut there. Overall, total revenue would have been down by 7%. We're at 17.6 billion, but overall I would say the group, in terms of its diversification strategy, continue to bear fruit for the group. Part of where we want to focus, and our group CEO will speak to that going forward, is our smart growth strategy. If you look at our other revenue items, excluding our net interest income and our gains on securities trading, our FX line, which is now across all three territories, contributed 2 billion. Fees from managed fund 3.9 billion. That would have been down by approximately 10%. We would have seen a shift in investor sentiments, more moving to fixed income. So the managed funds would have been impacted somewhat. The tight environment, our capital markets business line continues to contribute and do very well for us. It's one of the newer business lines, but it continues to serve the needs of our clients. Approximately 600 million in revenue to the group. Overall, the other revenues, excluding our NII and gain, accounted for 35% of our total revenue. And our intention going forward, in line with our smart growth strategy, is to shift that number in the short to medium term up to the 40%, and in the long term would like to even go closer to the 50% line. In terms of the one-off gain that I just spoke to, the SFC, a very important part of the JMMB Group in terms of our strategic diversification across the group and across business lines. We have a 23.4% stake as at December. The book value had jumped significantly because of the one-off gains. Total share of profits year to date approximately 16 billion, of which 14.6 billion of that arose from the transaction and the closure of the acquisition of Ivory. We continue to get good dividend flows, approximately 1.4 billion, and with the expansion of the SFC group, we would expect going forward increased dividend flows. And therefore, I would say that this investment has been an important investment and continues to do extremely well, as evidenced by the results that we are showing here today. In terms of our efficiency ratio, and our efficiency ratio is a function of your expense as a percentage of your revenue. Our internal policy is to grow our revenue faster than our expenses. You were seeing a jump in our expenses, part of which is as a result of the investment in our long-term strategic initiatives. Part of the increase is also attributed to inflation, but our strategic spend in terms of our digitization, our standardization, and our financial reporting system, some of the spend would be one-off and therefore not expected to reoccur. So as we put our strategic initiatives in place, we should get that growth in terms of scale, and therefore in terms of going forward, that level of centralization and efficiency we would expect to bear fruit in the long term, and therefore you would see our efficiency ratios coming down. I'd like to spend a little time in terms of speaking to our diversification strategy. It's very important to the JMMB Group. It makes the JMMB Group very unique in terms of the delivery being integrated financial services, not just in terms of the product suites we offer, but in terms of that regional diversification. So you would have seen in Jamaica where our investment business line would have been impacted, but in the Dominican Republic where we had those interest rates cut, we would have seen an increase in revenue there at 21% of our total revenue, 3.7 billion, up 4%. Trinidad as well, up 4%. So it shows that a diversification strategy where you're impacted in one country or impacted in a business line in a specific country, you're somewhat mitigated by that level of diversification. And it is so evident in the results of our numbers at the end of December. and continues. The diversification strategy, I would say, continue to definitely bear fruit for us. Diversification also by our business line. You would have seen, and we spoke to the high interest rate environment, the contraction in our spread on our net interest income, but we saw the growth in our banking business line, 8% year-over-year growth, accounted for 60% in terms of our operating revenue. And the financial services, our investment business line, would have reduced year-over-year approximately 6.6 billion, but it shows the diversification of the group, and it also strengthens the group. Just in case of our total assets for the group, the group continues to show growth in the positive areas that we would like. Specifically, on our total asset at the end of December was 726 billion, 10% growth, 14% growth in our loan portfolio, a net loan growth of about 24 billion. Our investment portfolio as well, in terms of 19 billion, or 6% growth. And where we have grown the balance sheet is on the deposit side of our balance sheet, a 13% growth, or 22 billion. And also, you would have seen a shift in terms of on the repo side, or our liability side, that would have declined by 1%. So as our CEO spoke to the risk-adjusted return on capital, that impact on the investment business line, you would have seen a shift where we would have focused more on the core areas in terms of our growth in the banking business line, and more, in terms of the investment business line being impacted on the NII and gains on securities trading. The long-term strategic initiative would be to switch to our smart growth initiatives. In terms of JMMB Group's capital, our capital would have shown significant growth, 72 billion at end of December. All the entities within the group would have been adequately capitalized. We're a highly regulated group, and with the reorganization of the group and the financial holding company, it shows the strength of the JMMB Group. We continue to utilize our capital and to get that risk-adjusted return. Our capital would have been boosted by our profitability for the year to date, and in addition to that, with the movement in terms of interest rates in DR, for example, and in some instances in Trinidad, you'd have seen a favorable movement in our fair value reserves as asset prices continue to recover. Our strong capital base, in terms of our risk rating, we would have seen where Chris would have reaffirmed the group's risk rating. We got A- for our regional local currency, BBB plus for the regional foreign currencies, and AA- for our local currency. So it speaks to the strength of the group, it speaks to the strength of our capital, the healthy balance sheet that we have in terms of how we are growing the balance sheet. And what this rating basically says is that within the next 12 to 15 months, the group will likely to continue on a solid path in terms of profitable outlook, as it did not foresee any significant variation in terms of the group's strategic initiatives. Also in the Puesta de Bolsa, our fellow rate also maintain an A- credit rating for the Puesta de Bolsa. That's the investment business line in the Dominican Republic. So overall, from a strategic initiative, it speaks to the group's strength in terms of its capital and our initiatives that we are executing. That ends my presentation, but just like to summarize the context in terms of our group diversification continues to work for us. It continues to deliver profitability, especially in our regional coverage, where we are impacted in one, we continue to be bolstered in another, and we'll continue to execute on our smart growth strategy. With that, I'll hand over to Kerry.
Thank you, Patrick. Thank you for sharing those details with us. And as we continue to move through today's presentation, I'm going to hand back over to our group CEO, Keith Duncan, who has a number of things to share. Well, typically he speaks about the way forward, but he has a couple of great announcements to share as well. So again, without further ado, handing back over to Keith Duncan. Sir Keith?
Thank you, Carrie Ann, and thank you, Patrick, for your overview of the financials. A good context for how we go forward. At the end of the day, what we're trying to deliver for our shareholders, investors, and clients is win-win. We have to deliver increase in return on equity. We have to deliver dividends to our shareholders. And in order to do so, we have to optimize our capital, optimize and preserve our capital, grow our capital, and manage through the tight monetary policy conditions that we see in Jamaica and the Dominican Republic especially. And we do see some impact in Trinidad also from the Federal Reserve. So it is about managing our balance sheet, managing our liquidity to ensure that we can continue to grow in a very prudent manner, delivering increasing return on equity to our shareholders. And as I said, it has to be done within the context of the interest rate environment, and we believe that interest rates will continue to be at these levels for some time over this calendar year. We have to continue to diversify our revenue streams, less reliance on net interest income and gain on securities traded, and more towards non-interest income lines like value-added fees, where our clients feel good about the services that they are getting, that they're willing to, pay fees on. We are also looking to, increase our FX trading, our treasury activity, looking also to grow our balance sheet in the across the group, on and off balance sheet, selling more fund products for our clients, that is delivering financial goals through our off balance sheet products to our clients, and that will increase our non-interest income revenue lines. We intend to also, consistent with our smart growth strategy, use our risk-adjusted return on capital methodology to ensure that we're getting the best out of the entities, delivering products and services that enhance the risk-adjusted return on those business lines. And we continue to be supportive of Sagicor Financial in terms of their own drive for growth across North America, in the North American market through their acquisition of Ivari, and also in their Caribbean operations, Eastern Caribbean, and also in Jamaica. So therefore, I believe we do have a good diversified story, a tough economic environment for us that we have to contend with, but we will continue to sharpen our pencils and continue to drive through and continue to grow our operating profit at the country levels as we go forward into the new financial year. But we also have some really positive and a positive announcement to make in relationship to that long-awaited JMMB Moneyline app, which is now available. So I'm going to hand over to Mr. Gifford Rankin, our Head of Digital Services across the group, for him to take us through this. Thank you.
Thank you, Keith. Thank you, Kerry. As Keith just mentioned, our JMMB Moneyline app is now available. It's available in both on Android and iOS. So you can go to the store and just search for JMMB Moneyline and you'll be able to download it. The app complements Moneyline. It allows our clients to manage both their banking and investment needs, at the touch of their fingertips. Right, you'll be able to see overview of your portfolio as usual. You can trade live on the Jamaica Stock Exchange, stocks listed in Jamaican dollars and those listed in USD. It has a great feature of when you're doing transfers, whether internal or external, where you can get a receipt and you can easily share it to anybody via WhatsApp, via email, without having to do a screenshot. So I encourage everybody, all our clients, to give it a try, and we're always welcome to feedback, and stay tuned for further updates and great new features coming in the app.
Thank you, Gifford.
Back to Kerry. Mm-hmm.
Thank you, Gifford. We're very, very excited about this amazing news. And before I hand back over to Keith, yes, the app is available in the Google Play Store and in the Apple Store. So feel free to go ahead and download. We will be sending out communication messages directly to our clients starting today and in the coming days going forward, with more information about how to access it, the features and the benefits. And we know it's long awaited, and Gifford and his team, indeed all of us, were celebrating. So we're we're happy about this wonderful rollout. So back over to you, Keith. Thank you very much.
Okay, thank you very much, Kerry. And Gifford, thank you very much for delivering on that. I know that our mobile app offers features which are really, really attractive. My family has been very much a part of the testing, and our clients are going to find it a really good experience, and we're happy to be able to deliver it. We promised it for some time, and we are here, and I know that our clients will be overjoyed when they use this app. And thank you very much to the digital team, the change support team, and all those that contribute to making this possible. So and also I'd like to just acknowledge that that Trinidad, we have appointed a chief country officer in Trinidad, and Mr. Sean Moses. And so he is up and running, as I believe, and will be able to share with us going forward. And you will see a lot more of him in our investor briefings and our annual general meeting, as he will be taking responsibility for our country operations in Trinidad. Congratulations, Sean. Sean is a tough cookie, but and he drives returns and manages his costs effectively. So we're expecting to see Trinidad deliver greater and greater of returns to the group. And he has a great team that works with him in Trinidad at work, and we expect Trinidad to continue to deliver as they have this financial year. And also acknowledging the efforts of the DR team, Mr. Juan Ozemelo, our Chief Country Officer in the Dominican Republic, who have delivered returns for the group this financial year. And as we said, diversification works in seeing positive performance out of Dominican and Trinidad. Jamaica and our country officer, Keisha Forbes, we are grappling with some very tough market conditions in Jamaica. And I know that you continue to drive a team to deliver results. And also there are many strategic initiatives that we have to deliver in Jamaica in moving Jamaica as a country into that deliver the return on equity that we so really want to deliver to our shareholders. And therefore your leadership around this is going to be very important, Keisha. And hopefully when we get to our next annual general meeting, that you're able to say this is your clear strategy aligned with smart growth, which will deliver returns to our shareholders. Jamaica has always been a significant contributor. Jamaica has been the flagship that has delivered significant profits to the group over the years. And now we're just working through to ensure that we get back on track in Jamaica. Keisha Forbes, thank you for your leadership also. and to the executive team and the team members who make this possible in terms of delivering a value proposition to our clients. And we thank you also for your efforts. So therefore, JMMB continues to be who we are, consistent with our vision of love. And we are happy that we are able to deliver solutions to our clients in our loving and caring manner, and returns to our shareholders. Thank you very much.
Okay, thank you very much, Sir Keith. So we're very, very happy to share everything that we would have shared in this morning's presentation. Of course, we would have had the opportunity to share two very good announcements, well, great announcements, I would say. Of course, highlighting that our beloved Sean Moses has transitioned to a broader hat there in Trinidad and Tobago. Hi, Sean. I'm sure you're watching. Congratulations. Now our new country head for Trinidad and Tobago, and of course the rollout of our highly anticipated JMMB Moneyline mobile app, which brings together a comprehensive experience of banking and investments in one app. And I know that there have been some folks already downloading it. We put it up about a couple of days ago, and we're already getting wonderful feedback, and we'll continue to send more communication around that and the rollout of the app. So we're very excited about that and happy and celebrating those wonderful bits of achievement. And so, ladies and gentlemen, thank you so much for joining us. We're very happy to have spent this time with you to share the information, to share the results. And of course, we are already well into our fourth and final quarter for this current financial year. So we'll definitely see you again towards the end. And I know we move into, of course, our annual general meeting and so on later down in 2024. But of course, we will continue to share with you everything that we need to share with you as we continue to move through, finish out the financial year, and start a new one. And so without further ado, again, thank you very much for joining us. Thank you so much to the team who supported in this production, to my co-presenters here, Mr. Patrick Ellis, and our group CEO, Mr. Keith Duncan, and to Gifford, of course, who joined and shared the great news. We're very, very happy to have had you here. Let me just check and make sure that there's anything that we need to bring to the table in terms of questions. Yes, I think I see one coming up here. I'm multitasking, folks, so give me a second. It just popped in. Two questions, I believe, from another one of our learned colleagues, Mr. Al Edwards. Hi, Al. Thanks so much for joining, as always. First question from Al, which I'll invite Tracy to answer. Al is asking, how is your real estate portfolio going? So I'm going to hand over to Tracy, who heads up that portfolio for us, to give us some details and an update and a response to Al's question. Tracy, I don't think we're hearing you, so I don't know if you're muted or no? Okay.
Tracy, she's there now, I think.
She's there. I just don't think we're hearing her, and
I think we have Paul Gray online too.
Can Paul give us a response to that question?
Sure.
Thanks, Paul.
Good afternoon, everyone. Sure. So our real estate portfolio, I would have mentioned in past updates, included our land bank, and we have cited about two major projects that we're looking to execute. We're in the advanced stage of design, with a view to having our project submitted to the relevant authorities for sign-off. So we are hoping to achieve that throughout this year, with a view that we will start development work towards the end of this year going into next year. So we're pretty upbeat around that. As it relates to other real estate opportunity, we always have our eyes on the ground looking for opportunities, and as those come to fruition, we'll give an update around those. But the two main projects that we had before is what we will be focusing on with a view to getting those up and generating returns for our shareholders.
Thank you so much, Paul. I much appreciate your jumping in there. And our second and final question that will respond to Al live is, and I'm gonna invite Sir Keith to answer this question for Al. And the question is, where do you see growth coming from non-balance sheet activities? Where do you see growth coming from non-balance sheet activities? Sir Keith?
Thank you very much, Kerry. We definitely see through portfolio management or off-balance sheet strategies where we package our unit trusts and other vehicles, off-balance sheet vehicles, into investment vehicles for our clients, for them to be able to achieve their financial goals, education, retirement. We have our pension arm also. We do also have our equities. We just launched our mobile IPO app. JMMB is a significant player, and I think the number one stockbroker in Jamaica in terms of number of transactions. Our mobile platform for trading has done very well, and the market uses it. Like that has given us significant market share. So there are a number of areas that we're continuing to grow our non-interest income. JMMB does have a significant foreign exchange trading and buying and selling of currencies to our client base. We also are looking to increase, for example, areas of where we have value-added fees to our clients. So therefore, in increasing services to our clients, portfolio management and otherwise, what we see is our fee income will continue to increase, but hopefully increase at a faster pace. And these are some of the areas that we're looking at, among others.
Thank you, Keith. Much appreciated. And so that's it. So thank you so much again to everyone who would have joined. We appreciate your time and just taking the time out of your very busy schedules to be with us here today. Of course, for any questions that we were not able to get to live, we'll be either answering them directly in the chat window, which we know we have been, but also we will certainly contact you after we conclude this live to answer any additional questions that you may have, as always. And so again, thank you so much to my co-presenters, Mr. Patrick Ellis, Group CFO, or Group CEO, Keith Duncan. Travel safely, Sir Keith, and come back to us soon. We know you're very busy, and we thank you so much for joining us. And thank you again to the team who supported in the back to make sure that another successful investor briefing was brought to you to share everything that we would like to share as at the end of our third quarter. So again, everyone, have a wonderful rest of the day, and we'll see you again soon.